Credit cards, how to use them wisely. Are you struggling to keep up with your credit card bills? Do you wonder if there's a smarter way to use your plastic friend without drowning in debt? You're not alone. Today, we're tackling a topic that touches almost everyone's life: credit cards. Now, let's face it, credit cards can be a double-edged sword. They offer convenience and the chance to build a credit history, but misuse them, and you're in for a financial nightmare. Don't forget to hit that subscribe button and stay with us till the end, because we've got a fantastic bonus tip waiting for you that could change your financial game. Let's get those cards working for you, not against you. Number 10. Schedule your credit card shopping. Shopping with a credit card doesn't have to be a financial minefield. The secret? Plan your purchases. Instead of impulse buys, wait for sales or special deals. It's like hunting for treasures. You get more value for your money. This approach turns shopping into a strategic game where you're the winner. For instance, if you know you need a new laptop, wait for tech sales. This planned approach stops you from overspending and keeps your budget in check. Plus, it feels great to score a deal. Remember, a credit card is a tool, not an excuse to spend recklessly. Number 9. Integrate credit cards into your budget. Credit cards aren't a free pass to spend. They're a part of your financial ecosystem. To use them wisely, weave them into your budget. Know your income, your expenses, and where your credit card fits in. It's like fitting puzzle pieces together. Everything should have its place. A smart budgeting tip: allocate a portion of your income to credit card payments, especially if you're carrying a balance. This helps prevent overspending and keeps your finances balanced. And remember, budgeting isn't restrictive, it's empowering. It gives you control over your money, instead of your money controlling you. Number 8. Use credit cards to build your credit history. Credit cards are like the Swiss Army knife of your financial toolbox. They're not just for spending, but also for building a solid credit history. Timely payments and low balances tell lenders you're trustworthy. It's like building a good reputation with every swipe. This good credit history is crucial for life's big steps, like getting a car loan or renting your dream apartment. Did you know that a good credit score can even help you get better rates on loans and insurance? It's true. Every time you use your card wisely, you're paving the way for a brighter financial future. Number 7. Consider a secured credit card. Starting with a secured credit card is like learning to swim with floaties. It's safe and builds confidence. Perfect for beginners or anyone rebuilding credit. You put down a deposit, which becomes your credit limit. This means no surprise debts. Did you know secured cards are reported to credit bureaus just like regular cards? That's right, using a secured card wisely can boost your credit score. Make sure you choose a card that reports to all 3 major bureaus for maximum impact. The key here is discipline. Use it for small, manageable purchases and pay it off consistently. Number 6. Be selective about your purchases. Now, let's chat about being smart with your credit card spending. It's all about self-control. Instead of swiping your card left and right, use it for specific types of purchases only. Let's put this into perspective. If you use your card for everything, it's easy to lose track of spending. The next thing you know, you're in over your head in debt. But if you use it just for, say, fueling your car or your bi-weekly coffee treat, you're in control. You know exactly what's going on your card and when. Plus, here's a smart hack. Put a recurring expense, like your streaming service subscription, on your card. Set up an automatic payment from your bank account to cover it each month. This keeps your card active, helps with your credit score, and keeps you out of the danger zone of overspending. Number 5. Keep your credit utilization below 30%. Let's talk about credit utilization. It's a big deal for your credit score. Keeping your credit utilization below 30% is like telling lenders, "Hey, I'm good at managing my credit." Here's why it matters. Your credit score is partly based on how much credit you use compared to how much you have. For instance, if your total credit limit across all cards is $10,000, try to keep your total debt under $3,000. Studies show that people with the best credit scores, think 760 and above, often use less than 10% of their available credit. It's a bit like a credit trust score. The lower your utilization, the more trustworthy you seem. So what's the plan? Monitor your balances, spread out your purchases, and maybe ask for a credit limit increase if you're consistently hitting that 30% mark. Number 4. Tackle your credit card debt strategically. Got a mountain of credit card debt? You're in good company. Here's a stat that might surprise you. The average American has over $6,000 in credit card debt. But don't panic. The key is having a solid plan. There are two popular strategies, the snowball method and the avalanche method. With the snowball method, you start by knocking out the smallest debts first, regardless of interest rate. It's a morale booster. Every debt you clear gives you more confidence. On the other hand, the avalanche method involves paying off debts with the highest interest rates first, which can save you more money in the long run. Number 3. Stay away from cash advances. Cash advances are like quicksand for your finances. Sure, they seem like a fast fix, but they can pull you down into a debt pit. Why? High interest rates. For starters, cash advance rates can be significantly higher than your regular purchase rates, often around 24% or more. And here's a kicker, there's usually no grace period. This means the interest starts piling up from the moment you take that cash. It's like a ticking time bomb in your wallet. According to a report, the average cash advance fee is either $10 or 5% of the amount you take out, whichever is higher. So if you take out $500, you're already $25 in the hole before you even spend a dime. And that's not even counting the interest. It's a slippery slope, and before you know it, you're paying more for the privilege of borrowing your own money. Number 2. Always pay more than the minimum. Paying more than the minimum is like giving your debt a 1-2 punch. If you're just paying the minimum, here's a wake-up call. It could take years, even decades, to clear your balance. The reason? Interest, my friend. It's a silent budget killer. Did you know that if you have a $1,000 balance with an 18% interest rate and only make the minimum payment, it could take over 13 years to pay off, and you'll end up paying almost double. So what's the smarter move? Pay as much as you can above that minimum. It slashes the interest you pay over time and speeds up your journey to a zero balance. Number 1. Pay your balance in full every month. I know, paying your balance in full every month might seem like climbing a mountain. But trust me, it's worth the climb. By clearing your balance each month, you're saying a big no thanks to interest charges. That's right, zero interest. It's like getting a short-term loan without any extra cost. Let's throw some light on this with a stat. The average credit card interest rate hovers around 16%. If you carry a $1,000 balance, that's $160 per year in interest alone. But when you pay in full, you dodge these charges. The trick is to make it a regular habit. Think of it as a monthly financial workout. Each time you pay off that balance, you're building your financial muscles, keeping debt at bay, and staying ahead in the game. Bonus tip, spend mindfully. Now here's your bonus gem, spend mindfully. It's about quality, not quantity. Before you make a purchase, ask yourself, do I really need this? Will it add value to my life? It's not just about staying within budget, but making sure each purchase counts. Mindful spending means being intentional with your money. It's like being the captain of your financial ship, steering clear of unnecessary waters. This approach helps reduce impulse buys and keeps you focused on your financial goals. Think of each purchase as an investment in your life. Subscribe with us and learn. If you find the information in this video valuable, please subscribe to watch more videos like this and also share it with family and friends. Write "I subscribed" in the comment section below and let us know of topics that interest you in the subject of finance. Please hit the like button and the notification bell to be notified. There's more waiting to be learned in our next video. Our aim is to provide you with high-quality educational content and information to help you learn and hopefully be financially free one day. The contents of this video are for educational and informational purposes only. Thanks for watching.